somber tone for other energy junk credits that are troubled as well.
Especially after that 27% move in prices in 3 days.
The behavior that led to the financial crisis remains in place today. It's not the America of the 1950s and 60s.
There are some very strange things happening today.
We think this is an interim response.
The whole world's down 2.5%.
Yes, we're paying ahead. But the saving grace is that we're getting closer to a bottom by the day.
The global central banks are taking us into recession.
What do they know that we don't?
We're looking for smoke signals.
So how can we have the same rates today?
The market is now observing itself from another angle as an observer of the observer of the observers.
You get this party mobile. Every once in a while, Janet wants to put the brakes on it. And Larry says, nah, let it go. And the people in the party are yelling, no, don't touch those brakes. Don't touch, this is fun. And they're moving toward this cliff, see?
Heightened concerns about growth in China and other emerging market economies have led to notable volatility in financial markets.
So when, Warren Buffett says when the tide goes out, you see who's wearing shorts. When we look around at commodity
Who's naked?
Yeah, who's naked?
Brazil is the one furthest out in the water with the least swimwear on.
Which is true in Brazil anyway. Why did I say that?
5 letters, C-H-I-N-A, China.
This bubble was always going to burst.
It's worse than you think. Whatever you might think, it's worse.
It's a total mess.
The next global recession will be made in China, just like many other things are in the world today.
At CarVal, we are thematic-based investors who are looking for dislocation around the world.
Does a hard landing in China matter? Absolutely it matters. It's the world's second largest economy. It's one of the world's largest consumers of commodities. There's no doubt that a decelerating China ending up in a hard landing would not be good for our markets. The emerging market cycle today is similar to the Asian financial crisis of 1998 in that they both started in a strong dollar environment, a weak commodity environment, a significant run-up in leverage, and a Fed tightening cycle.
We are very worried about the political situation of Brazil. The president has a very low approval rate, and she's not going to be able to do any kind of structural reforms or fiscal reforms without the support of the Congress.
We see a huge amount of volume continuing to come out of the European banks and the bad banks in some of the European markets. In Ireland, there's still a lot of deal flow. In Portugal, the problems sitting on the bank's balance sheets are significant, and we expect that to be a continued area of focus for us.
There is a lot of talk about liquidity in the markets today, and that could create volatility, and which is actually a really good thing for the high yield team. In the derivative space, we can get the liquidity we need because we're more patient with our trading and constructing trades that we really like, and we can put them on over time and then eventually harvest them down the road.
We're also seeing interesting opportunities in our hard asset strategies, specifically shipping and aircraft. And we found some very unique off-the-run opportunities that have been very accretive to the portfolio.
We've been particularly focused on a niche within that space where we're buying residential mortgage bonds that are insured by AMBAC, a bond insurance company that's in rehabilitation. That continues to be an area where we're finding pockets of value.
Here at CarVal, we know liquidations. The liquidations in the commodity space we see coming, but there are definitely capital structures that are too levered on companies that may not have a reason to exist that will ultimately end up in liquidation. We feel we'll see those and take advantage of those.
Real estate is still able to be acquired well below replacement cost at yields that are very compelling and leverage levels that still make very good economic sense in the market today.
The UK and Germany, they're quite red hot, but if there is one country that has been overlooked, it has been France. And France is really at the bottom in terms of value and provides an extremely interesting opportunity for real estate investors right now.